What's up, Bat Fam? Welcome back to the Build a Trader YouTube channel. In this video, I'm going to be talking about how to add to your winning trades. Adding to your winning trades is very helpful and can increase your overall profitability. You always hear add to your winners and cut your losers quick. Well, this is how you add to your winners, and I'll show you how. Now, I just finished recording the first half of this video. It's about 15 minutes long. There is going to be a part 2 because there is more to it, to this strategy, and I can show you guys more examples. This is just one example on one trade. There are so many more examples I need to show you guys and so many more little confirmations and things like that. So we'll look out for the part 2 coming up this week, and I'll see you guys on the charts. Alright, Bat Fam, here we are on the charts. So right now we're looking at GBP, JPY, and I'm going to go over an example that I traded on Friday using this exact scaling in method and adding to your winning trades. First things first, this is a high risk strategy. However, it's very, very profitable and very rewarding, but you need to be focused and know how to manage your risk quickly and effectively, as in trailing your stop loss quick, moving it below or above the previous candle very quickly. You have to be very focused, and also increasing your risk by adding more entries when you have the opportunity to do so. By doing that, you're able to capitalize on the movement that you have successfully caught in the market and increase your overall profitability by increasing your risk. But you have to reduce your risk at the same time. It's absolutely crucial, because if not, you're going to take a rip or a big loss. Okay, so you have to have discipline in terms of risk management and discipline in terms of risk exposure, and not get too carried away with the lot sizes and having too many entries to where you can't manage them effectively or quickly. Okay, so let's get started here. Now, it does not matter what strategy you trade, if you're a breakout trader or you trade smart money concepts or just supply and demand, whatever it is, I think everyone can benefit from learning how to add additional entries and add to their winning trades and increase their profitability. Okay, the scaling in method is very effective, and I learned this from my first mentors, Marlon, shout out to you, and Q Banks, shout out to Q. Gotta pay my respects to both of them. So now, first things first, we're going to look at the 4-hour time frame here. So what happened was this GJ broke this major point of structure and support. It created lower high, broke this, and next thing that happened was a lower low that followed through with that. Okay, so essentially this is what I did. I saw this candlestick right here. We closed bearish. We had this minor pullback, this wick. Okay, now there's a lot of bearish momentum here. We had a double top pattern. We had a lot of bearish momentum coming down to the support level, and this was also London Open or the crossover. Oh yeah, right before New York Open. So this was the London New York crossover, which is a very high volume trading time. Now, given that this was bearish and there's a lot of bearish momentum, I saw this as a pullback, and then once the candle flipped down back to bearish, it pushed and broke through and continued all the way down for, I believe it was almost 200 pips, and this was on this past Friday. So this move was 120, and then 120 pips. The whole entire move was 242 pips. Okay, so first things first, what did I do and how did I do it? Well, one, I identified this area that I was about to break, so I did enter right here at 165, 164.95, that price range. Okay, so I'm going to add the risk to reward tool right here. Now I entered there, and I had additional entries as well. And not only that, I also scaled out quickly, because when you scale in and add to your winners, you have to know how to exit and scale out. Because if you don't, and if you're not focused and you're going to let the market play out and come back, you're going to take a bigger loss, or that winning trade is, it's just going to slip right through your fingers, and you don't want that, because you want to be securing the gains, obviously. Because sometimes the market will give you another opportunity to enter, so you'll be able to take a small gain and then another re-entry opportunity to catch that move that you're originally seeing. But you have to be thinking quick. You have to be making quick decisions, and you have to manage your risk very quickly and understand price action very well. Okay, this is not for beginners. I do not recommend this, and if you are going to try this out, I would demo it first. But this is what I'm teaching the students in the premium channel and in the student chat, and they are absolutely getting it. And one student is learning this concept very, very well. And you can't do this every single trade. The conditions have to be right. And if you do try to do this every single trade, you'll see that a lot of times it doesn't work, or you'll do it too early, and it's just learning from experience and knowing how to do it well. But ideally, you need to catch, you can do it on about a 20 pip movement, but that's a little too small. You want to be able to scale in effectively on these larger breakout moves. So you need about a 30 to 50 pip movement, maybe even more, like a 100 pip move. Those are very effective conditions and market movements to be able to scale in on. And you need that momentum. You need those conditions to be able to do it. Because if not, the price is going to come back, and it takes a lot of quick thinking and very effective risk management. And oftentimes you might get a lot of break-even trades or small losses. Okay, so the conditions have to be right to be able to scale in very effectively and advantage of these moves fully. I scaled in right here and had another entry. I'm doing this very quickly, by the way, and I'm not going to add another risk reward tool because it's going to look messy. So I'm going to add a line. So where this line is right here, I'm going to make it to a dotted line real quick. Okay, so entered again, and this is all as momentum is going. Entered again. I had my max risk exposure on this, which is a half lot on my Audacity account. So as this was going, I'm literally scaling in. And how do I do this? Well, you're going to see on the lower time frame here, but this is essentially what it was, and I closed down here. And as it pulled back, wasn't really sure what was going to happen, if it was going to come up back here and retest, but it didn't. It just continued. So I was able to get in again and write it down to here for additional pips. And I believe I caught just part of this move. I could have definitely held this, but it is what it is. Yeah, I think I closed this for like 10 pips, entered when there's momentum, just got out, and then it just kept going, and I should have really just held that, but it's all good. And it was a losing week last week, and I was able to come back and make a profit, so very thankful for that. You have to take what you get. So essentially, look at this 30-minute time frame. You see all these wicks, right? This is what I'm entering on these lower time frames. I'm seeing this on the 5-minute and the 3-minute, and I'm also identifying momentum, and it's during a high volume trading time. A major key level and structure is broken, and once you understand those things, the only next point the market has to go to is down, because that's the next area. Okay, once it's already tried to break multiple times, so now that it finally broke, the momentum's there, and the fact that it's a high volume trading time gives you even more confirmation and probability that the trade is going to work out. Okay, so where all these dotted lines are, you see how they line up on the wicks? Now these aren't the exact prices I got in, but I could show that if I wanted to. But this is essentially literally what I did, and it is in the student chat. Actually, you know what? I will show it. I have it in the Telegram. So 1 second. What did I do here? Yeah, right here, look at this. Look at my GJ entries, 164.15, and that's at the lower side that I was saying I only closed for a few pips on. Okay, now what else did I do? I continued to do that as it was going down as well. Now where's the other entries? Here we are here. Oh, this is what I'm looking for. Essentially, you see all these cells, right, as I'm scaling in and closing this for 20, 30 pips, right? And like I told you, you need about that type of movement and momentum to be able to scale in and take advantage of it. Because if you stay in too long and it comes back, you're going to get hurt. So you really need to just be quick to exit, because you're making more on that trade than you would have if you just didn't scale in at all. So you need to be thankful for the increased gain, because like I said, it's a higher risk strategy. Now, if you're able to hold out for the duration of the whole move, obviously you catch a lot more pips and make a lot more profit, but you can't hold on too long when you're doing this. Okay, but as you just saw, all my entry points here and here, and it just kept going, right? So, exited for the 27, 30 pips I closed for. We had a retracement. Could have entered again and wrote it down for more pips, but I didn't. Like I said, I caught a lot more pips than they would have had I just held it for the duration of the move, and then entered again down here at this area. But let's look at these lower time frames when I'm saying, like the 5-minute and 3-minute. The 5-minute time frame. I'm gonna remove these dotted lines, as you guys kind of saw the entries that I had. So essentially, these little wicks is what you're entering on, because you already understand the structure is bearish, the market is bearish, you understand there's a lot of bearish momentum, and you understand where the next area that price could potentially go to given all these factors, right? So you're literally, for some of you people, it depends where you enter, but if some of you smart money concept traders and other really good traders out there are able to snipe these wick entries, let's say you got in right here where this dotted line is, right? You caught the wick entry for this retracement when it first spiked up past 165 for the last final tap and then went down, right? You caught the wick. Now, a lot of you might have only had this entry right here, or had just like another one right here and just let it ride. You don't have to do that, okay? You literally can take advantage of that whole movement and go like this. Right here, you caught the sell, and let's say you're targeting, here'd be your original entry point, and let's just say you're going to target these previous lows here, just right here, okay? You already know, you have your confirmations, you entered on these points, you know that the market most likely is going to go there, so you have these entry points, you go break even on both entries right away once it's pushed down like this, right? With all this momentum, if the market comes back and takes you out, then you know it is what it is, because if it's going to work, it's going to work, okay? So it went through, had a little pullback, little retracement, it didn't come back to your stop losses, that's fine, okay? Now, depending how you trade, there's a few things you could have done. You could have literally just closed on this move. This was a 28, 29 pip move, okay? That's a pretty good move just to catch in 3 minutes, literally, okay? You could have just closed right there, or like I said, you were targeting these lows, so you maybe held out for the duration. Now, depending on what you're seeing and your patience and your understanding of the market, you see this pullback and you're anticipating to get stopped out, but you see this bearish candle and you go, okay, it is going to come back down. It looks like it's working. So as you see this push, and once it comes back up to retest, you can enter again, just like that, where that blue line is. I'm going to go to the 5-minute time frame. That's what it looked like. Came down, pushed up, had that last little move, whatever you want to call it. It literally pushed up and tested this broken resistance, or broken support, not resistance, and came down and pushed bearish. You would caught that entry here. Now that you have your confirmation that it's moving down, you could have taken another entry right here. And as it's moving, you need to drag these stop losses here, where they're at right here, these break-even ones, they need to be even lower. They got to be above this wick now, or even at this point, at that entry, all stop losses. Okay, you got to do this very quickly, because now you have 4 times the risk that you normally had on, right? So let's just say this was you're risking 1% on these 2 entries. You're like, okay, that's my risk. Now you break even. You will not lose any money on this trade no matter what. So now you can literally risk another 1% if you wanted. So increase your risk by twice. So let's just say you're trading 1 lot. Now you have 2 lots on the trade if you wanted. You have 1 at break even, and you can see this as a second trade opportunity. If you do this, though, you have to take into consideration that you might lose the trade that you're already in, since those positions are profitable. But if you understand what you're seeing and you can manage your risk quickly and effectively, you can literally take more profits from the market than you originally planned. The stop losses go break even, they go above this wick, enter, break even, and it's pushing. Now you can just exit when you see it start coming back, because you already increased your risk. You're in a good amount of profit from this point. If you entered on that retest right here, from this point, you'd be up 38 pips total on your first entry. On this entry, 36. On these entries, about 20 pips, right? That's a lot of pips for, let's just say, 2 lots. Okay, about 25, 30 pips on 2 lots, that's $600. Okay, originally, you were planning to make $300 or whatever. Yeah, you were intending to make $300. Now you just made twice the amount and increase your risk and reduce your risk at the same exact time. Now, if you're able to do this, you can take a lot more money from the market and really increase your profitability, because you don't have to have these just a singular entry. You can literally scale in on the move, on these market movements, based on your understanding of what's going on. The market conditions need to be right. You got to know how to manage your risk right and quickly and be focused, because if the market comes back, you're going to take a rip. So that's why you got to drag those stop losses quick and trade with momentum. Okay, now this is more of a price action based strategy and a price action momentum based breakout strategy, but it's highly effective in the right conditions and if you manage your risk very effectively. And above all, whatever strategy you trade and how you trade. Risk management is always going to be the number one thing in any trading strategy. However, I think everyone should learn how to take advantage of their winning trades and scale in and find additional entry points, because you can literally, take out so much more from the market just having a stronger understanding of what you already know, okay? And I don't want to make this video too long, but I think that might be the only example I'm going to go with. I could show, that's the only example I'm going to go with, guys. It's already been about 15 minutes long. I hope you enjoyed and learned a lot out of this. If you have any more questions or want to learn more in depth about how to trade like this, consider joining my free Telegram channel. And I also have a premium mentoring channel where I am teaching the students, and we're having one-on-one mentoring session, one-on-one Zoom sessions, live Zoom sessions for the weekly analysis. And I have an exclusive student chat where we're just sending charts and giving each other feedback and help each other out. We're all in this together. We're a bat fam. So appreciate you sticking around to the end of the video, and see you in the next one. Peace.